Welcome to The Explainer. So, what happens when a stock suddenly goes parabolic? Today, we're going to deconstruct a massive surge and see exactly how the pros read the charts to figure out what could happen next. So, let's set the scene. It's November 13th, 2025, and one company, Ondas Holdings, that's ticker ONDS, sees its stock absolutely skyrocket. We're talking over 19% in just one day. Now, that is a huge move. That's the kind of thing that makes everyone sit up and pay attention. And, this didn't just happen out of the blue. The reason for the jump? The company dropped some fantastic third quarter financial result. They totally blew past what everyone was expecting, and it painted this really strong picture for their whole drone and autonomous systems business. But that brings us to the real question, right? After all that initial excitement dies down, how do you even begin to analyze a jump this big? Is this the beginning of a whole new climb, or is it just a flash in the pan? Well, the answer, it's all about finding the clues hidden in the trading data. And this is where we get into something called technical analysis. It's a whole different way of looking at things. It's not so much about the company's spreadsheets and earnings reports. It's really more about reading the mood, the collective psychology of the market. All right, so let's break this down. The core idea behind technical analysis is pretty simple. It assumes that all the news, all the opinions, all the hopes and fears about a company, they're already priced in. They're reflected in the stock's price and its trading volume. So when you study the chart, you're not just looking at lines, you're basically studying human behavior on a massive scale. And at the end of the day, what are analysts really looking for? Well, they're hunting for two main kinds of signals. You've got your bullish signals, which are signs the price might be heading up, and then you have the bearish signals, which suggest the opposite, that the price could be on its way down. It really is a constant tug of war between the buyers and the sellers. Okay, so let's get into the nitty-gritty. We're going to put on our detective hats and look at the three main groups of clues that the analysts used to make sense of that huge 19% jump for ONDS. First up, clue number one, the trend. This is all about the big picture. What's the general direction the stock has been moving in? What's the underlying current here? And right away, things get interesting because we have a conflicting story. On one hand, you've got an indicator called the ADX, which is basically a power meter for the trend. And it's saying, hey, this recent move has some real muscle behind it. But then another tool, the Arun indicator, is looking at the bigger picture and saying, yeah, but the long-term direction has been down. So what you have is this massive new wave crashing against a much larger downward tide. All right, on to clue number two, volume. How many shares are actually changing hands? I love this analogy. Think of it like the roar of a crowd. A little murmur isn't that convincing, but a huge roar, that tells you something big is happening. And wouldn't you know it, we've got another puzzle here. The volume on the day of that big surge was absolutely staggering. That's usually a really bullish sign. It's called accumulation, meaning tons of people are buying in. But some other, more subtle indicators were hinting that money might actually be flowing out of the stock. That's distribution. So this creates a potential volume trap, where that huge number you see might not be telling the whole story. It could be deceptive. Okay, and that brings us to our third and final clue, momentum. This one's easy to grasp. If the trend is the direction the car is going, momentum is its speed. How fast is the price changing? And more importantly, is it accelerating or hitting the brakes? And guess what? The momentum signals are, you guessed it, mixed. For instance, one tool, called the MACD, is suggesting that the downward pressure is easing up, which is good. But then other indicators, these things called stochastics, are flashing a big overbought warning. That's just a fancy way of saying the stock might have gone up too far too fast, and it could be running out of steam. It's kind of like a rocket that had a powerful launch, but is now starting to lose some of its thrust. So let's just take a step back. What do you do with all this? You've got a powerful surge fighting against a long-term downtrend. You've got massive volume that might be a trap, and you've got momentum that's showing signs of slowing down. Well, this is key. Good analysts don't pretend to predict the future. Instead, they map out the possible futures. So the report basically lays out three different scenarios for the stock. And which one plays out? Well, it all depends on which of those conflicting forces we just talked about ends up winning the fight. And this is a perfect example of how analysts use specific price levels to ground their scenarios. This isn't just random guesswork. They've identified what's called a resistance level. Think of it as a price ceiling at $7.16. If the stock can break above that, things look bullish. On the flip side, they've marked a support level, a price floor, at $6.13. If it falls below that, it's a bearish sign. And the neutral scenario? Well, the stock could just bounce around between those two levels, hovering around that central pivot point of 674. So, after weighing all the evidence, the trend, the volume, the momentum, and mapping out all the possibilities, what's the final verdict? What's the big takeaway? And here it is. The bottom line is that the stock is basically at a crossroads. That amazing earnings report created this powerful short-term burst of excitement, a bullish storm, if you will. But it just hasn't been strong enough yet to completely reverse that bigger, weaker, longer-term trend. It's really a moment of total indecision for the market. And you can actually see this delicate balance boiled down into a single number, the final technical score, which came in at 51.10. Now, on a scale where 50 is perfectly neutral, 51.10 is just barely tipping over to the bullish side. It perfectly captures that tug of war we've been watching this whole time. So that brings us to the big question, doesn't it? Is technical analysis some kind of crystal ball? And the answer is not at all. What this whole process really shows is that analysis isn't about predicting the future with absolute certainty. It's about building a roadmap. It's about understanding the different paths the stock could take, knowing the risks, and, most importantly, identifying those key signposts to watch for on the road ahead.